Shri Gurubhyo Namaha. Hi guys. So today I'm going to start a new topic, which is the most buzzing, standard that is happening and that is being discussed across the ACCA community. That is your IFRS 18, right? So there has been a lot of discussion on IFRS 18, so that IAS 1 is gone, preparation and presentation of financial statements is gone. So now IFRS 18 is going to replace that. What kind of changes will be there across the syllabus? So for SBR students, for diploma in IFRS students, for financial reporting FR students, what kind of changes will be there? Will this have an impact across the entire syllabus? So there is a lot of confusion and there is a lot of panic amongst the students, some students, not everybody. So in this series of videos, I'll not be covering the entire IFRS 18 in one single lecture. That's not practical. So in this series of videos, what I'll do is I'll go through each and every point of IFRS 18 that is applicable for ACCA students, because IFRS 18 has a lot of other topics which are not in the syllabus of ACCA. So within the purview of ACCA, that is FR, SBR and DIPA IFRS. So what are the topics that are covered? I have already created a material that you can see on the screen right now. So this is a 22 page, so 2 pages index if I take it out. So 20-page material purely on IFRS 18 with a lot of examples, with all the side headings that are needed and everything. So you can refer this material. This will be a one source of truth for you guys. Anything you have questions on IFRS 18, you can refer to this material. Okay, so first of all, let's start with the introduction of it. So I'll quickly go to the introduction of IFRS 18 and let's come on. Ouch. It just froze and cancel. Let me reopen it again. All right, let's continue. So let's start with the introduction to IFRS 18, as you can see on your screen. So what is the formal title of this particular standard, sir? This formal title is Presentation and Disclosures in Financial Statements. So now let me tell you one point right now. The standard title for IAS 1, the standard which is being replaced, is IAS 1 Presentation of Financial Statements. So if you see IFRS 18 Presentation and Disclosure, so here itself you can understand that this IFRS 18 is going to focus a bit more detailed on disclosures compared to IAS 1, because IAS 1 was only on presentation of financial statements, but IFRS 18 is presentation and disclosures of financial statements. So more attention will be paid to the disclosures of the financial statements. So it marks a significant development in the international financial reporting. It was issued by the IASB, your the standards board which prepares all the IFRS and IAS. It becomes effective for annual reporting for the periods beginning on or after. So this is very critical, on or after 1st January 2027. Sir, if it is coming to effect in January 2027, why are we studying it into 2025 itself? That is the beauty of ACCA. So ACCA wants their students and their members to be proactive, right? You should be prepared for something that is going to happen in the future, not something that already happened 25 years ago. So as a student of ACCA, you should be prepared for what is going to come in the future. That is why, even though this standard is not yet effective, so companies are not following this yet. So for financial year starting 2025, for financial year starting 2026 also, IAS 1 will be followed. IFRS 18 will be for financial year starting 1st January 2027 onwards. Okay. So we are being prepared in advance for at least something that is not yet implemented for the next 1.5 years. Okay. So what is the start date for any financial statements that are starting on or after 1st Jan 2027? Okay. So starting, beginning, not ending on 1st Jan 2027. So if a company has a financial year of, let's say, 1st July 2026 that ends on 30th June 2027. Now read carefully and determine whether IFRS 18 is suitable or applicable for that year or not. See, the standard says for annual reporting periods beginning on or after 1st January 27. This particular financial year beginning is on 1st July 2026. That is before 1st Jan 2027. So even though the balance sheet date is 30th June 2027, IFRS 18 won't apply for this particular financial statement, because that beginning is before the effective date of IFRS 18. I hope that made complete sense and clarity to all of you. So I'll proceed further. So the financial year has to begin after 1st Jan 2027 or on 1st Jan 2027 if a company is following a calendar year. Okay. Now, what are the main objectives of IFRS 18, sir? Very standard boilerplate, whatever is there in IAS 1, the same things are copied over. Just few additional topics are there, so let's go ahead with it. The main objectives of IFRS 18 is to enhance the comparability of the financial statements across all entities and all industries. So this is one of the important point. Earlier, there was too much flexibility given in IAS 1. So companies were able to modify their profit and loss statement, or else you can call it performance statement. So your statement of financial performance or statement of profit or loss statement, income statement, whatever you are calling it. So there was a lot of flexibility available for the companies. They could make certain additional line items, they could hide some items, they could aggregate certain things, they could disclose certain items, they had the option to hide certain items inside the notes to accounts, just show one item as something like other expenses, and then if somebody needs to understand what are those other expenses, they go to the notes and then they read. It was not very standardized or not very uniform, not comparable across the industries. So IFRS 18 is trying to bridge that gap. IFRS 18 is saying that now the financial statements which are presented as per IFRS 18 can be comparative across industries, across different entities, because it is more uniform. But yes, while trying to standardize certain things, while trying to make it uniform and universal, IFRS 18 still covers flexibility. So a banking entity might need to prepare its profit and loss in a separate format. An insurance company will require separate disclosures, or else a manufacturing sector will have a cost of goods sold to be presented in more detail. So IFRS 18 understands that it should be entity specific, it should be industry specific, but the format in general needs to be standardized. That is the objective and purpose of IFRS 18. While it tries to maintain uniformity, it also encourages and it also allows for dedicated or specialized disclosures across different industries. We'll talk about that. I made sure that all of these items are covered in detail. So you can see point number 9, section 9, industry specific example. How does banks disclose their financial statements? Insurance, retail and manufacturing, tech, conglomerate, diversified groups. How do they all present IFRS 18 based financial statements? I have covered all of those in detail, so let's not worry about anything ahead. Stick with me and go through each of these items. Okay, so the first one is that IFRS 18 is trying to give you a more comparable and more uniform financial statements across industries. Next one, it is trying to improve the transparency of the financial performance. So why are we focusing on transparency? Because there are so many companies which are showing a positive number on their bottom line of the P&L. I hope you know what is bottom line of P&L. Bottom line means the last line of the profit and loss, which is nothing but net profit. So we usually use the two words. What are those? Top line and bottom line. So top line means the first line of the P&L, which is nothing but your revenue or your total sales or turnover, whatever you are calling it. So there are different definitions for that. Each of these words mean different things in reality, but in general, if you try to understand, if I have to give you a very, very vague meaning of the top line, it is sales of your company. And then bottom line is there. What is bottom line? Net profit after all taxes. Okay, net profit that is distributable to the stockholders or shareholders, whatever you're calling them. So the top line and the bottom line are, you know, generally used terminologies across the industry. So now if I talk about the bottom line of a P&L, so there have been so many instances where companies were presenting you know, a positive figure on the net profit, but on investigation, or if somebody with financial literacy, somebody who understands the financial statements, if they go and review these financial statements, if someone like me goes and you know, looks at this profit and loss, we can immediately identify that, okay, this is just a number game. This company is not really profitable. It is just presenting the numbers. It is manipulating the presentation in such a way that even though the true financials of the company are not favorable, they are showing a positive number. So is that possible? Absolutely yes. There have been numerous cases where companies that were in losses in reality were showing a net profit because of, you know, the game that can be played with accounting standards. I cannot go beyond that for an academic context. If I am dealing with this in a real life scenario, if I'm sitting with the board of directors of a company or something like that, my you know, presentation would have been in a different manner. But in an academic context, you just need to understand that IFRS or IAS or any other accounting standards, if somebody becomes an expert at those, you can play with them and you can manipulate the numbers that you want to show in however way you deem fit. Okay, so IFRS 18 is trying to restrict that level of misrepresentation and trying to enhance the transparency of the financial statements. And it is trying to provide a structured, well-structured, proper definitions, proper subheadings. Everything is defined. We'll discuss that in a short moment, so stick with me. Consistent approach. So earlier there was a lot of inconsistency. So if you are somebody who already studied IAS 1, or if you are somebody who already has knowledge of financial statements, so ask yourself a single question, very basic question. Depreciation. Depreciation is something that we all know, that is something that we studied in +1, +2, 11th, 12th, inter first year, second year, whatever you are, whatever you call it. So it is a basic thing, right? Assets depreciate. Depreciation is an expenditure. So now my simple question for you all is, where should I present depreciation in the statement of profit and loss? So if I'm talking in IAS 1 terms, like the previous report, the previous format, so we had revenue minus COGS, cost of goods sold, then we had GP minus SG&A expenses, selling general and administrative expenses, then we had PBIT, which is also called operating profit, minus interest, PBT minus tax, PAT. So this is a very basic format which we have followed under IAS 1, right? So where is depreciation? Simple question. So depreciation is in COGS. Acha, very good. So yes, correct. So depreciation could be an administrative expense, correct? Absolutely correct. So now my simple question is, can a company present its depreciation in the cost of goods sold? Yes. Can it present it in administrative expenses? Yes. So which is correct? Both are correct. Both are correct. Which is the standard? Both are in the standard. Sir, how, sir? Yes, sir. Because IAS 1 did not specifically tell you depreciation should go under this particular line item. Depreciation should be included in COGS. Depreciation should be included in SG&A. No, IAS 1 never said that. IFRS 18 never said that. Then what is the improvement, sir? You will understand it in a moment. IFRS 18 actually tells you that it gives you categories here. Instead of just a standard format like this, IFRS 18 gives you proper 5 categories, or I would rather not call it categories, that is 3 categories plus 2 side headings, subheadings we can call them as. So 3 plus 2, 5, I was calling it like that. So 3 categories and 2 subheadings are there. We'll talk about those in a moment. Just stick with me. So IFRS 18 basically gives you a more consistent and a more structured approach, because it gives you 3 headings, 2 side headings, 3 categories basically. So everything is well structured and there are proper definitions for everything. There is clear mention of which item should be presented in which section. Everything is very clear. Okay, next one. To ensure clear communication through mandatory subtotals, like I just mentioned, 2 subtotals and 3 categories will be there, and the disclosure of the performance measures. So this is something that I'll be very interested for SBR students. You had something called as management performance measures. So MPMs, that is what this is. So management board of directors can present whatever they want, like for example EBITDA, EBITDA, earnings before interest, tax, depreciation and amortization. So there were so many non-standard terminologies that were used by the management to manipulate the presentation. So now IFRS 18 covers all of those. IFRS 18 is giving you proper definition for these MPMs. It is telling what are covered under MPMs, what are not covered under MPMs, what should be the disclosures for that. I have covered everything in the material, do not worry. So if you see here, I had a separate section purely on MPMs, management performance measures. What are MPMs, examples, what are not MPMs, disclosures, another example with the disclosure, why are they important, summary and conclusion. So I have covered everything in detail. So stick with me through this series of lectures. Everything will be clear. Okay, chalo, let's wind this first intro lecture with this topic. So let's continue. So IFRS 18 entities are required to follow a more disciplined format, well structured when preparing the statement of P&L. This includes categorization of all incomes and expenses into 5 clearly defined categories, which simplifies comparison and analysis for the users such as investors, analysts, regulators, whoever is using the financial statements, mainly profit and loss. Now everybody knows which item is presented under which category. There is no ambiguity, absolutely no ambiguity. There is no confusion with the presentation. 5 headings are there, subcategories you call, whatever you are, 3 of them are categories, 2 of them are just subheadings, but either way. So 5 side headings you will have, 5 subtotals you will have, and you clearly know which item goes into which subtotal. It is just the same profit and loss presented with more detail and more clarity, more transparent categorization. So here IFRS 18 outlines the mandatory principles for presentation and disclosures. 2 mandatory principles are there: relevance and faithful representation. Same whatever has been there in the IAS 1, the conceptual framework, same things ma. So your primary objectives and enhancing objectives and all that stuff. Okay, so you have the 2 primary objectives: relevance and faithful representation. Provide all the relevant information, and whatever information you are providing, that should be faithful, that should be trustable, there should be evidence behind that. So the standard prescribes the framework that entities must follow, that is whether specific information should be disclosed in the core reports or it should be relegated to the accompanying notes. The judgment. Should I show something on the face of the financial statement, like on the P&L? Should I show a separate line item, or should I show it as other items and show it in the notes to accounts? That is a judgment. That is still a judgment, but some items it is clear that they should be on the face of the P&L. So user must make sure that they are applying proper judgment, whether something should be on the core financial statements on the face or something should be in the notes. The nature of the information to be presented must be very carefully considered. How much nature, what items are you presenting, and the level of level of details that are required for appropriate presentation. So should I go everything in detail? That will be too much information. Should I just show the summary? That would be too little information. So you should know how to break a balance between showing too much information versus showing too little information. So the information that is presented should be exactly sufficient for a decision maker. That is the entire outline of IFRS 18, right? Chalo. So I'll break the first intro lecture here. That would be part 1 of the intro. Then the part 2 we'll talk about the rest of the side headings. All right. Chalo. I'll see you soon in the next video. Until then, keep smiling. Take care. Bye bye.